welcome back to another episode of Tech Pro Unicorn. I am your host, Michael Grace, and today I am joined by Andy Wang. Andy is the managing partner at Runnymede Capital Management. He's also the host of another podcast called Inspired Money, which is a Forbes top 10 personal finance podcast by financial advisors. He's been named among in the Investopedia 100 most influential advisors, top 100 most social financial advisors by Brightscope, and has appeared on Reuters TV, Barron's, and Forbes. So Andy, welcome. Thank you for taking the time. I appreciate you joining us here on the podcast.
Thanks, Michael. It's so good to be here.
Awesome. Is there anything else besides that already impressive introduction that you'd like to share about yourself, maybe, before we jump into it?
Are you looking for random factoids? What are you looking for?
I love it. Yeah. Something the community doesn't know about Andy.
I once said that I really love eating food, and I can probably eat 1.5 times my body weight in sushi. Although these days I'm trying to back off of that because I saw Dr. Sylvia Earle give a talk, and she's a famous oceanographer, explorer, and her message was that we are definitely overfishing our oceans, and she totally stopped eating sushi. So when she told me that, I said, all right, I should try to dial back.
I love it. That's a great factoid and an important tip, just about over consuming the oceans. That's awesome. So being the managing partner of an investment firm, I'm sure folks are always after you about investment advice and what they should do. And I know a lot of our folks, our listeners, are entrepreneurs or leaders. Some of them in various states of wealth, right? Maybe there's some of them just starting. I jokingly was just counseling. We just hired a new group of business analysts here in our office that are all just starting their professional careers. And they were like, oh, it's going to be my first credit card, right? And they forget about investing. They're like, what credit card should I choose? And I thought, oh, what a journey they're about to go on, right? Maybe folks just starting out investing, what are some tips to get them started?
Well, I think for most people, you said that people are coming into the office wondering which first credit card they should use. I actually saw kind of scary times back. And right after I graduated from college, one of my college classmates was involved in marketing. And he said, oh, you should go to this like college age kind of convention, and they have all kinds of products there. So I just wanted to go check it out. And I saw like the predatory sales of credit cards, like these credit card companies preying on students saying, sign up for this credit card and you'll get a free t-shirt. And some of the kids were like, there's no way I can get a credit card. My parents will kill me. And these credit card salespeople, marketers were saying, oh, they don't have to know. And I was watching this with curiosity, just saying, oh my gosh, this is not good.
Yeah.
And it goes back to the fact that I think most of us just don't get enough personal finance education in school, right? We learn English, we learn math, we learn sciences, social studies, but how to balance your checkbook. And these days, people don't even carry around a checkbook. But it's just like, how do you manage your personal finance balance sheet? Like your credit cards versus your earnings, and are you even keeping track of that? So simple things, I think, when it comes to just saving, and then the other side of that is investing, because every penny saved, potentially you could be investing. And when you invest in the stock market, when you invest in real estate, these are assets that can be appreciating while you sleep. And that's the secret. So to answer your question, for most people, their employer-sponsored retirement plan is often the best place to start, because so many employees have access to a 401k plan or some retirement plan, that the great thing about it is that once you are contributing to the plan and participating in the plan, it all happens kind of on autopilot, because with a 401k, you're electing what percentage of your paycheck is automatically getting deducted and put into your 401k. So it happens all behind the scenes. So if you're selecting 2%, 3%, 5%, hopefully you're increasing over time. This is happening without you thinking. And oftentimes that is where you get the best result, because you're not paying attention to it. It's an automatic retirement savings plan. And you can also set it up to be investing automatically into specific funds or a target date fund. But that is something to watch out for, because I've seen people who thought that they had elected to participate in their 401k plan, not realizing that they never selected their investment funds. So that's happening less these days, but worst case scenario, you thought you were participating, but your contributions were just going to like a money market fund sitting in cash and not growing for you, or at least growing minimally, and that's not good.
I love it. I love your appreciate, assets that appreciate when you sleep. I was listening to my kids who, are college age at this point, and asking for investment advice, and they're asking parents and such, which some parents haven't invested, right? Or don't have that investment experience. And so then they kind of like do internet research, right? They're kind of out there scouring, maybe they're buying Bitcoin and trying to understand that. There's way more sites and information and pressure, which is, the pressure to invest instead of spend is a good thing. But there's so many avenues, I guess, now for them to go down, whether it be Robinhood apps on their phone or non-traditional, right? Investment vehicles. I mean, is that kind of a good thing? Is it a bad thing? How should they go about getting educated about what to do?
Ultimately, I think it's a great thing. The less friction there is between an investor and actually being able to invest, the better. It wasn't that long ago when it did take a lot of paperwork to open up an account at a brokerage firm, and trading commissions were over $100. I mean, I'm thinking back to when I graduated from college, going back to the 90s, commissions were pretty high. And therefore, it paid to just buy and hold. You didn't want to be transacting very frequently, because especially if you were buying just a few shares of, oh my gosh, back in the day, like when I graduated, it was like America Online, if I can date myself. But if you were buying IBM, if you were buying whatever stocks, small like share amounts, but if you had to pay $100 in trading commissions, you just don't want to transact. These days, it went down to $10, it went down to $8, and now it's commission-free trading. So that's why you have the advent of now apps, which make it even easier. So Robinhood and others, I mean, you just transact on your phone. And we saw that at record levels during this pandemic, while so many people were home. Students were home from school, people were out of work, and they were at home. So the amount of people who were day trading or investing, it was really record breaking. It was impressive. If you ever tried calling one of the 800, customer support lines, they were just being inundated because they were understaffed and the volumes were so high. It was pretty nutty.
Any money invested, right, can be a good thing. I think I saw I'm going to date myself, right? I remember back when E-Trade became such a big thing because they were offering $8 transaction fees, right? And everybody was like, $8, that's amazing. And everybody went over to E-Trade. Nowadays, I just saw a video of a gentleman who, was driving a Bentley, and the guy came up to interview him, and they said, how did you make your money? And he said, put a couple dollars a day into Bitcoin every day and you'll be a millionaire, And I was like, it's just not that simple. I mean, maybe if you bought it, I remember also at the, I'm dating myself, we're probably similar age, at the advent of Bitcoin, and Bitcoin came out and it was like, a couple $100. And, if you bought Bitcoin when it was a couple $100, it's now over $61,000. Sure. Yeah. You're probably doing quite well.
That's a heck of a return.
Those are the few. So as people get in, what makes a great investor, right? If you look at, everybody looks at kind of the big names in investing, they're like, oh, these are big high profile names. What maybe makes the qualities of a great investor?
Well, I think that I'll mention two things, because let me start by saying that there's really only one Warren Buffett, right? Everybody knows Warren Buffett. He's just like he's a famed value investor and just has a tremendous track record. Warren's advice for the masses, for most people, he says you should just buy the S&P 500. Don't bother trying to pick individual stocks, trying to pick individual companies, because there's just too much data that needs to be analyzed, understood, and there's an argument that says that the stock market is pretty efficient, that it's very, very difficult to find opportunities where you can uncover value. But for the experts, and Warren Buffett has proved time and time again that he's able to do that. He says buy the S&P 500. If you look at Warren as an example of a great investor, I think that great investors are very patient. They're not looking for a home run like in a week or a few days. They do the work, they do the analysis, and they have a methodology so that they can measure all stocks using kind of the same measuring stick, and therefore make a comparison and say, okay, look, company A compared to company B, very undervalued in comparison, same industry, and may have done some research on the management, understand where the management has come from, what's the CEO's background, where'd the CFO come from, were they developed from within the company, have they been there a long time, or did they come from outside? And if that's the case, what was their track record when they came, before they came to the company? Were they at a company that was growing and had a good balance sheet and good track record of success? And when I look at those things, you look at the company's balance sheet like a student's report card, and you say that, for a student to be a C student at one university, and just because they transfer to a different school, what's the likelihood that suddenly overnight they're going to become an A student? So we look at companies' balance sheets that way and management's records that way, saying, all right, what was their previous experience? Did they do a good job? And that gives some sense of what's the likelihood that they're going to bring positive change to the new company. So those are some of the things. I think having a methodology, having patience, and really being able to stick to that process, because there are just so many variables and so many surprises along the way. It really does take that stick-to-itiveness of having a process that works and having a confidence in that process that you can just, that it's repetitive and you can keep doing it.
I love it. You see some of the videos, right, of these investment clubs, and they always show like, a guy sitting at his computer with like 800 screens, right? He's just in this room of screens with all these charts, and he's like, and I'm always like, you can't possibly have your pulse on all that, right? I love your advice about, just, I also tell people, not that I'm in any way an investment advisor, but understand the company that you're investing in, right? Like, is it something you want to buy? So many people buy a company or invest in a company and they don't know anything about it. Like, to your point, right? Understand who's leading the company. What are their values? What are they doing, right? People hold stocks in companies that they know nothing about. And I'm like, well, how do you know what they're going to do, right? Like I hold a very small amount of NVIDIA because I'm a gamer, right? And I understand NVIDIA and I understand what they do and their products and where they are in the market. And I feel very comfortable. Win, lose, I like NVIDIA, right? So if they go up, great. If they go down, okay, fine. So many people just invest blindly because, they're following something that blipped and they're like, oh, I got to get in on that. You don't even understand what you're investing in.
Well, I think that there's a temptation all the time to want to take the high risk. And, we call them water cooler stocks because you hear your coworkers, near the kitchenette talking about, oh, I made a lot of money in X. And there's this promising company, tiny company that's new, and they're going to have the cure for cancer. Like, as humans, we're all drawn into that. I mean, it's fear and greed. So when we hear that, like, story, you hear those whispers and you're like, I want some of that. I want that Bitcoin at $300. It's just very tempting to say, all right, I'm gonna put some money in and see what happens. But too frequently, those just don't end well. You make a great point with NVIDIA, invest in what you know. And that reminds me of Peter Lynch, who was at Fidelity for many years and managed one of their big mutual funds, had a tremendous track record. And that's one of his messages. It's invest in things that you're familiar with. Look at what are brands and products that your family is buying, right? It's like, what are you buying? What are your kids buying? What is your spouse buying? And he used that to his advantage many times. I know that like Gap Stores was a company that he invested in early on because that's where his family was shopping regularly at the mall. And he was able to identify major trends, whether it's retail companies or technology companies. When it's something that you actually use and you see it at an earlier stage and you just see that like more and more people are buying it, those are the types of companies that you can say, all right, let me do a little research. Or you just based on that kind of mega trend that you see this expansion, new products, geographical growth, right? Entering into new markets. Those are what ultimately are going to drive a company's earnings. And when a company makes more money, their earnings grow, their stock price should follow. So that's just a basic lesson. Earnings do matter. If you can find companies that grow their earnings, 15% a year, every year, year in and year out, those are companies that you tend to do very well owning for many, many years. And those are companies that tend to allow you to sleep well at night and reward shareholders handsomely.
I love it. Water cooler stocks. That's my takeaway from this podcast. I love it. I love it because it's so true. People just hear things or they see something on YouTube or whatever, and they blindly want to believe, right? Maybe they're in a bad spot and it's an act of desperation
this is the counterintuitive thing because it's those water cooler stocks or my uncle told me about this company or my cousin told me about that company. Those are so like, they sound so exciting and you're drawn into it. But if you follow Warren Buffett's advice and you just buy the S&P 500, the 500, basically like you're buying the entire market because those 500 companies are representative of just the stock market as a whole. You own 500 companies. Those are like 500 of the largest, well-managed companies in the United States. You own that. It seems kind of boring because you look at your statement and you're like, oh, I own the S&P. Like, where's the excitement there? But if you truly look at the 500 companies, the 500 member companies in the index, they're growing their earnings as a group. And that's why it just keeps climbing. And sometimes the boring story is the best place to be.
Right. Slow and steady often wins the race.
The tortoise wins.
Yes.
The tortoise beats the hare because it's going to take some luck to pick the right hare. And owning 500 companies, you get diversification. It's safer, less risk that you're carrying because what are the odds that all 500 companies are having an issue? As a whole, they do well. And academic studies say that just buy the S&P 500, you'll do well.
I
Call
love
it a day.
I love it. So many folks join these, clubs. There's been a lot of abnormal or emergent disruption in investing recently, right? With Robinhood and such,
With
where people
Reddit.
join these groups of hundreds or thousands of investors and they go all in on one stock, right? And the stock goes up and then they all go, okay, ready? 1, 2, 3. Okay, we're all out, right? And they make money, and it's very disrupting to companies' balance sheets. It's very disrupting to, well, not their balance sheets, but their stock price for sure. It's disrupting to the market. It makes me personally kind of nervous to watch that. I'm like, what, it's almost like some syndicate or something that's kind of moving around doing this. And, there's been all this look, and is it legal? Is it not legal? Can they do it? How do we stop them from doing it? And it's an ad hoc question I'm posing to you, but what's the investment community think of that? Like, how do you, or are they just kind of ignoring it as a one-off?
Yeah, it's a really good question. I think that, these technically, if you were touting some small company that, wasn't very liquid, therefore it doesn't take much to move the stock, those are called pump and dump schemes, and that's illegal. You're not allowed to do that. That's called like manipulating a company stock and for your personal gain at the expense of others, right? Whoever's late to the game is going to lose, and that's illegal. You can be barred from like trading in the securities industry. You can be barred from the industry if you work in the industry. Wow. There can be criminal charges. I think when you look at Reddit, you look at like the Wall Street Bets subreddit group, there's an argument to be made. Like, is it just a pump and dump scheme? I think it's not that simple. If you look and read, if you read many of those conversations, there are actually good analysts in there. Like, there are varying degrees of expertise and varying degrees of research being done. Some of the individuals have done fantastic research and have done good work to identify attractive investment opportunities. And then they're trying to share that. Should that be illegal? Because I've heard the argument that what's the difference between, the US large banks? If you look at like a Goldman Sachs, you look at a JP Morgan, they're essentially doing that too. I mean, they have a team of analysts doing the work. The bank has like underwriting business. So they help companies to issue stock, and then their analysts are writing reports, and then they sell that to their customers. So they're sharing the news too. Is there a difference if a bank does it or individuals do it? I don't think so. I think that you can't have like a pump and dump scheme, but you can have an internet that is very democratizing and allows people to share information with each other. And if they're doing research, they should be able to share that research. I don't think there's anything wrong. There's no wrongdoing there. So,
yeah,
there are many gray areas, right? It's not so black and white. But it goes back to your question, these apps, the information, so that people can Google and learn things online. I think overall, that's all positive. I mean, power to the people. Ultimately, you want to empower more people. And today we have a terrible problem with income inequality. And wherever we can level the playing field, even if you're just, working like a low-paying retail job, but if you're doing the right things, which is spending less than what you make so that you have some savings, you should be able to invest in companies that you like or invest in the S&P 500. And if there are no transaction costs, I think it does level the playing field so that really anybody can invest.
I love that, right? Income inequality, and investing used to be such a white collar thing, right? People that were, my dad was a carpenter. He labored most of his life. He didn't invest, right? There was no investing. There was, I earned money, I get paid cash, I put it in the bank, maybe I have a savings account. That was about it. And, white collar, higher paying jobs and such, those were the investors. You know, now I'm watching my son, who's 21, just graduated from college, has a great job, really get excited about investing, right? With all his friends, and they talk about it. And it just fills me with pride, right? And then it makes me kind of look at the American investment opportunity. And I'm just so thankful for apps like Robinhood that has a really good education component in it too. And you know, that you're able to buy a share of stock or a portion of a share of stock without being able to buy a share of stock, or buy some of Bitcoin without buying a, you know, a $61,000 share of Bitcoin. It breaks down that income. I love that you pointed that out, because folks with little to no money almost can do something in investment, savings, even if you're using those checking accounts where, you know, it rounds up and puts a little bit of money, you know, into a savings for you, and you just don't even notice it, right? Over time, you have a couple $100.
Yep. Yeah. When you can automate, the more you can automate, the better you do. That's the funny thing. I think when it comes to your money, usually emotion is not the emotion that helps you. It's hurting you. So when you can automate any processes, whether that's bill paying or automatically saving, automatically investing, those automations are big wins, because you're removing the emotion. And you know, I think as humans, it's our strength and weakness that we have. We're emotional beings, and you know, too often I think when emotion comes into play with money, it just tends to be a bad thing, because money, it does require like a logical, less emotional approach. And yeah, when you get too excited, you make rash decisions, and sometimes bad things happen.
I love right. One, I I just love the amount of information that's now out there about investing. And sure, there's Google and such, but as a podcaster, right, you're putting information out about investing, which is awesome, right? So whether you're a reader who likes to read and buy books, or maybe you're an audio listener, and you use Audible books and such, or you like listening to podcasts, and you can follow Andy on his podcast. Why did you decide to start Inspired Money? Like, what was the driver behind that?
Yeah, you know, it's a good question. This goes back 4 years ago, and I can't believe that I've been publishing Inspired Money for 4 years every week. Time flies. It's really incredible. But for me, I came to podcasting, I think, a little bit late. I came to podcasting after listening to Serial. I loved listening to this case, you know, of the kid who had been imprisoned for, or he was accused of murder, and the journalist just does a great job, you know, revealing his story through different interviews, and I totally got sucked in. I love that with the podcast, it's on demand, so I can listen to whatever I want while driving to and from work, during the commute, or while I'm washing the dishes at home after dinner. I'm not, you know, I'm not confined to like morning drive radio, which is fine, but I didn't feel like I was learning anything. So from Serial, I went to listen to, you know, different small business owner podcasts, marketing podcasts, and I just liked that. I felt like I could learn something. You know, hearing from people who were sharing their positive business experiences and successes. So one day I said to myself, oh, it would be fun to try to have a money podcast, but, you know, it's like loosely about money. We can hopefully encourage listeners to be inspired by positive money stories, hearing different business owners and what they did to, you know, to make their fortunes. Inspired Money is very broad, so I can also talk to people who are charitably minded and have set up a nonprofit for a cause that's near and dear to their hearts. It's just like we all deal with money. And if I can get some inspiring, positive money stories instead of negative stories, which all too often is the only time people talk about money, you know, money is like one of the things at the dinner table, along with, I remember like my home ec class in 7th grade. It was like religion, money, like don't talk about politics. And so people don't talk about money. And I felt like some positive money stories would hopefully be a good reason to inspire people to maybe look at their 401k, look at their statement every once in a while, and to take action, because money shouldn't be scary. It should be something where you can hear like positive stories about.
I love it. And one of the best things that I love about podcasts, and I'm probably 3 years behind where you are on your trajectory as a podcaster, is just the opportunity to meet so many people that otherwise I would have never gotten to talk to Andy. So you get this opportunity to get all this input. How does it make you a better financial advisor, kind of being in this podcast seat, right? You get to talk to people every week. You hear inspiring stories. How does that shape your outlook and your leadership of a firm?
It's a great question. I feel like I can't even quantify. It's like, how much do you learn by talking to 52 people a year that otherwise would not have talked to you? And I've been very fortunate over the last 4 years. I will approach anybody. I mean, I get a lot of no's, right? But I invite a lot of people. And like, I got to interview Guy Kawasaki, who was one of the early Apple employees. Today, he's a well-known marketer and brand evangelist. Like, Guy would not talk to me. But because I had the podcast, I got to talk to him. I got to talk to Ryan Serhant from Bravo's $1 Million Listing New York. And he's one of the most successful real estate agents in the world. I mean, in the United States and the world. So to talk to Ryan about salesmanship and how did he become what he is today, which is one of the biggest real estate agents in the world, when he started as he wanted to be an actor in New York City and was struggling. He was a struggling actor. Like, to pay the bills, the best jobs he could get was for hand modeling. And that really wasn't enough to pay the bills. So he reached the point where he was ready to go home. I forget where he's from. He's from the Midwest, I think. And he was ready to go home. He's ready to call his parents and say, all right, I'm calling it. I'm coming back. And sort of a last minute thing, his friend said, oh, you should become a realtor. It's pretty easy taking the exam. And that's all you need to do. Just pass this test. And then he did that. And oh my gosh, I mean, he is a great salesperson. He would hang out in Starbucks and he'd scope out like women who were pregnant at Starbucks and then go up to them and talk to them, figuring that they're about to outgrow their little New York apartment and need to move. And, he would also look at their shopping bags to see where they shopped. And he'd approach people who seemed like they probably had money and they probably did need to upgrade their apartment. And that's how he got started. And from there, I mean, he just never stopped. Of course, he used his acting skills to get onto $1 Million Listing, which, has helped his brand like in such a huge way. But yeah, he's actor turned realtor, but he has the acting background. So he was able to go to the audition and be very good on camera and very entertaining. But yeah, one of the most successful realtors out there. He's doing great.
It's interesting because like you, I just love podcasting, and part of it is hearing people's stories, and it's funny how podcasting does open doors, and people are like, oh, you have a podcast. Oh yeah, you should talk to so and so and so and so and so and so, which is really very, very, very cool and flattering to hear. And it does, I always learn something, right? Whether it's water cooler stocks or now I'm going to also go research pump and dump to make sure I don't do it. You always learn something that just makes you, I always think, makes you better or levels you up a notch that you can then tell stories and share experiences with folks. People always ask me, they say, oh, you run this podcast to help your business. And I'm like, I don't know that my podcast has really had somebody sign up for consulting with us necessarily. I have gone to clients and they've researched me and found my podcast and said, oh, I listened to this episode and that was really cool. But it's never been like podcast first drives clients or sales, right? It's always like, it's a resource. I at least think, I think podcasters do it partially to give back to the community and to contribute some knowledge and to put something out there that hopefully benefits listeners.
Well, I find that it's really fun, albeit a lot of work.
Yes.
It takes a lot of work. It takes a lot of stubbornness to keep at it. But I'll let you in on a secret. It's one thing to talk to 52 guests, and I feel like there's like a takeaway every episode, right? So I learned something, and I feel like that makes me a better person. As a financial advisor, it is so important, and I'm sure that this applies to you too as a consultant, to be a good listener. You need to listen to your clients. And I'm going to say that I will confess and say that I think that being an interviewer makes you a better listener, or at least it makes me strive to be a better listener. And my wife will be the first to tell you that I'm not a good listener. But running the podcast, I realized it because I would be recording these interviews, and then when you listen to the tape back, I'd be like, I thought I was listening, but I didn't catch that at the time. And we're constantly trying to improve. It's like, know the value of active listening, and every podcast interview is another opportunity to practice. And I think that has had a positive benefit on, my client meetings, because I'm just doing it all the time. So I do become a better listener. I'm not going to say that I'm there yet. My wife will say that I'm not there yet, but I'm improving. And at least I realize and admit that there's a problem.
I love it. Yeah, we get credit for that, right? My wife would join your wife in saying, how do you run a podcast? Because all you do is you dominate conversations and assert your opinions. And
you can't
said,
dominate.
No, on my podcast, I listen. And I my wife always says, you're always looking down on your podcast. I'm taking notes, right? You're saying things like water cooler stocks. I want to remember that. And I write it down, pump and dump, right? Like, I love what you just said. I think the art of podcasting is, and it's being more and more consumed. More people are finding that they can fit podcasts in, on their commutes like you, or just doing things around the house, or with the advent of all the wireless earbuds and such. It's just so much easier to consume that media than it is sitting down and finding a quiet place to read, or making time out of your day to go watch a video on YouTube, or go watch a webinar, or participate in a conference or something. Those are very time committed events that a lot of people don't have time for. So
yeah, all of us are busy. So anytime you can squeeze in, not only squeeze in a podcast, but if you want, you can listen at 2x, or like 1.5 or 2 times. And I feel like I'm, the Matrix. Like I wake up and I'm like, I know Kung Fu.
I love it. When I listen to myself that fast, I'm like, wow, I sound really weird. Trying to be like, blah, 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 blah. So it's awesome. And Andy again runs Inspired Money as a podcast that's out on all the podcast channels, same place Tech Pro Unicorn is. I appreciate dropping the knowledge and some new terms for me, and the great advice, whether you're a beginning investor or maybe you're managing a larger portfolio and are looking for some advice. And every time my kids ask me, I'm like, talk to somebody who does this professionally, right? Don't talk to me. I do what I do, and I'm in a different scenario than somebody who is 21 years old, right? And they should seek out professional advice. such as Andy. So Andy can be found on the web at www.inspiredmoney.fm. He's again also available out where all the podcasts are. Andy, I want to thank you for taking time out of your day while the market's open, I think even still, and spending time with us.
Well, thank you. It's my pleasure. And to all the listeners, thank you for tuning in. I appreciate Michael having me on the show. Running a podcast is not easy. So please share this episode and do Michael a solid.
There we go. Thanks, Andy.
Thank you so much.